Okay, guys, so let's talk more about Apple stock. So Apple stock just posted their Q2 2020 earnings report a while ago, and Apple has been one of my favorite stocks. So I actually use this stock. This is like my default kind of savings account stock that I like to use, and it's also the largest holding of Warren Buffett himself. So guys, hard to go wrong with Apple. Very, very solid company. So let's take a look a little bit deeper into the chart. So I told you guys that I thought that this was a temporary dip due to the whole coronavirus sell-off, and that was a nice time to get Apple, which was trading basically at the price that it was. I would say about at the same time was about just recently in around October, September of last year. So, it was a nice time to get in if you kind of missed that run up for Apple. And I talked about how Apple has a very kind of a habit of basically running up and then being sold off a bit and consolidating and then shooting past previous highs. And I think this is the exact same thing that's going to happen here. So it already happened in 2018. It consolidated here and then it soared much higher in 2019. So I think we're going to see the same thing this year as well. I think Apple is going way past 320 and could head to 350 or so. But I want to show you guys exactly where I think Apple is going to be long term. So obviously it looks like it's going to go past that previous high in the short run, but in the long run, I think Apple has a lot of growth ahead of it. And one of the reasons why is simply because of their services business, guys. So in order to explain my point better, let's go into their latest quarterly earnings report so I can talk about this more in depth. So as you can see here, Apple's revenue growth had slowed as obviously there's a supply and demand problem for the coronavirus and they had a lot of closures. So let's take a look at those numbers a little bit closer so I can explain exactly what I'm talking about. So as you can see here, they posted $2.55 per share, 58.3 billion in revenue, with 28 billion in iPhone revenue and 13 billion in services revenue, guys. So that services number should really pop out to you guys because historically Apple has always done most of their revenue through their electronics, but their service business looks like it has a lot more long-term potential than I initially guessed. And one of the reasons why is simply because Apple is not just a phone company. So, a lot of people like to put these companies like Amazon, they say Amazon is not just an e-commerce company. Amazon has many other businesses, including their cloud-based business, which is doing very well. Or Tesla. Tesla obviously makes a majority of their money selling electric cars, but they have a thriving solar business that's growing. So I would say Apple's the same way. Quietly, their service business will probably eclipse iPhone revenue and probably be their biggest revenue generator. So if we just kind of take a look at how things have been going for Apple, I wanted to just talk also more about the dividend. It says Apple will also continue its buyback to buy back its stock amid the pandemic, guys. And this is just unheard of in these times where most companies have slashed buybacks to conserve capital. Apple is basically showing the world how strong of a company it is by authorizing another $50 billion share buyback and as well as increasing their dividend. So guys, actions are louder than words, and seeing as Apple has responded in these pandemics, we can only imagine how well they're going to do in the second half of this year once things kind of get back to normal. So as you can see here, Tim Cook, the CEO, said we have great confidence in the long term of our business. In the short term, it's hard to see out the windshield to know what the next 60 days look like, and so we're not giving guidance because of lack of visibility and uncertainty. It was a very unique quarter. I've never had anything quite like this. I hope to never have it again, but I'm incredibly proud of the company and what we achieved during that time period. So as you can see here, this is a quick look at the iPhone revenue, and this is a look at revenue and net income, guys. So this is kind of the release that's on this is a release that's on CNBC. So let's actually go to the actual earnings report so I can dig into those numbers a lot deeper. So I just gave you guys the highlights. So as I mentioned, I talked a lot about that services revenue reaches an all-time high. So guys, let's dig right into it. Okay, so here we are. We're actually in the financial statements of Apple, and this is what I kind of wanted to point out to you guys that is very, very special about things that are coming. As you can see here, we're taking a look at net sales for Apple ending that Q2 2020. We can see that the 44 billion generated in products and 13 billion generated and services, guys. So as you can see here, product revenue has actually dropped year over year for Apple, but what's increasing is services revenue. So why is Apple interested in increasing service revenue? Well, one of the reasons why service revenue, it just seems like a much smarter strategy for Apple to continue to grow is that Apple has dealt with a lot of competitors copying their products. So to come to mind, that would be like something like Huawei, something like that, which to me is basically an iPhone knockoff company. But the services business is where Apple Pay and things like that. All of their services that they offer, they are able to get more and more people kind of into the Apple family. So as you can see over the last 6 months, year to year, that revenue has grown a lot faster than product revenue. And the good thing about that is that simply, if you take a look here, you take a look at Apple's net income, Apple is basically able to generate so much money as they continue to focus on their services business, as they continue to get more people using their products, rather than worrying about, selling a new upgrade or something like that. Because in these type of times, people are less likely to upgrade their electronics and things like that because perhaps they just don't have the money. So as we can see here, net sales by category, the iPhone sales have dropped, and that's one of the reasons why Apple came out with the new iPhone SE. You guys, I know, made headlines for all you Apple fanboys out there. But that's one of the reasons why they came out with that cheap cell phone. They finally were realizing that they were losing money due to people simply, not being able to afford an iPhone. I mean, me personally, I would love. I always like Apple products, especially their computers. But for me to spend $800 to $1,000 for an iPhone, it just seems like a lot. So seeing that the SE was coming out at $400, I'll probably end up uh, trading in my Motorola and getting an iPhone. So that's kind of one of the things that I like about Apple. I like that the company is adaptable and things like that. And obviously, Apple has one of the strongest balance sheets, I would say, out there. They hold a tremendous cash position. As you can see here, they hold a ton of cash and marketable securities. So the company is sitting on a ton of cash. And as you can see here, not a ton of long-term debt and things like that. And one of the things I like to definitely look at, retained earnings, is doing quite well as well. And as you can see here, guys, Apple has done a great job on basically, managing a company during a tough times. We like to see companies definitely earning lots of money. So as you can see here, Apple, has basically been managing their balance sheet good, increasing their cash balance and things like that. And the company, I believe, like you see their cash balance, uh, let's see here. Okay, yeah, so they're sitting on $192 billion in cash. So you can find that from the article. So you don't have to worry about Apple having, to go out and borrow a ton of money or things like that. Although they did actually borrow some money on a note to kind of, borrow some cheap capital to increase their share buyback. So that was actually a good strategy by Apple, I think. The company is basically just super strong, guys. This is one of the best balance sheets that you're gonna see out there, and the company is dedicated to returning value to shareholders as well. So, guys, a lot of people have basically been knocking Apple and saying there's been a lot of articles circulating saying that the stock might fall down to $200 or something, but Apple is still king, guys. So I want to show you guys kind of a revenue chart to give you guys an idea of how things are going for. Okay, so I'm on macro trends right now. I'm just taking a look at Apple's revenue. So actually 2019 was probably one of the first times in a long time that Apple's revenue actually declines. As you can see here, from 2005 up until 2018, revenue had increased every year. So that was kind of a short-term blip right there, guys. And it just kind of showed that how iPhone demand had been slowing a bit, but Apple has already coming out with a huge host of new products. So I posted in my previous video all the new products that are coming out in the second half of the year. Many different products, guys. So Apple, I think this is a nice time to get into Apple stock. I think even though the revenue went down a ton, it wasn't a huge drop. And it just shows that, you know, they weren't really innovating as much as they were in the past. And now I can see with their new product line with the iPhone SE, the cheaper phone, they should absolutely blow that revenue number out of the water. So let's go back and take a look at Apple stock price and where I think Apple stock is headed in the future. Well, obviously I don't have a crystal ball, but I think that Apple is going to be trading by closer to $400 by the end of the year. And why is that? Well, for me, when I buy stocks, and I'm not talking about crappy stocks, I'm talking about quality stocks. I'm talking about stocks with real products and real revenue. So when we're investing in companies like this, we have to think like a business owner. And many business owners would like to own Apple. And even though Apple had to slow down in revenue last year, they're coming out with a ton of new products. So a lot of people, are obviously going to have a financial pinch during this crisis and things like that. But it's actually nice because I think Apple is one of the companies that will come out stronger due to this kind of pandemic. It's really going to force the company to innovate and kind of do the things that they used to do in the past rather than get complacent and rely on the iPhone and their MacBook and stuff like that to try to generate sales. So what we're looking right here is we're basically looking for Apple basically to just break out of this resistance around $330 and go to $400. So guys, Apple is dedicated to buying back shares. So as they continue to buy back shares, that's going to increase your stake in the company without you buying any additional shares. And they've been increasing their dividend every year. So I think if you're looking for one stock to buy, if you're not really sure, if maybe it's your first time in the stock market and maybe you're not really sure about Amazon, you're not really sure about Google stock or some of the more popular ones out there. I think if you just put mostly your money in Apple, you're going to do well in the long run. I mean, and one of the reasons is that actually Berkshire Hathaway, Warren Buffett, he's one of the greatest investors of all time. Their largest position is actually Apple stocks. So I'm going to show you guys that really quick. Okay, so a little bit more to give you guys some more comfort about Apple stock. As you can see here, this is Warren Buffett's current holdings through Berkshire Hathaway, and his largest position is in Apple stock. So he has over $71 billion invested in this company with 245 million shares. So as they say, guys, success leaves clues. If Warren Buffett has his biggest position is Apple, it's obviously for a good reason. So you can actually do pretty well just investing along with Warren Buffett. Obviously, he's not right on all of his picks. He did make some mistakes when it came to the airlines, but the fact that his number one largest position is Apple should be a good stamp of approval. So what I've done with Apple stock is like I said, I like to own it. I've just basically just been buying it using dollar cost averaging. I haven't been trying to time it because I know that Buffett owns it. I know that the company is continuing to grow their service revenue, which could eclipse products in the future. And I just know that it's a quality company, guys. Apple is quality. It's not over $1 trillion market cap by accident. So I think the stock is headed to $400, and I think it's one of the better stocks for beginners. You guys are just starting out in the stock market. Maybe you got interested in buying stocks, and maybe you're a millennial or something like that, or you're in your early 20s, or you're a teenager. You're not really sure about stocks. I think starting out with Apple stock is a good first starter stock for anybody. Hard to go wrong with that quality. So I'm looking at a price target by the end of the year closer to $400, and I think long term by 2021 we could see $500 a share as Apple continues to buy back more shares and the economy kind of resets, people start to buy their products. We're going to see a lot of growth. And one of the reasons why I think that is simply, well, I'm just taking a look at the long-term chart here, and it's an exponential growth chart, guys, even though there's some dips, some peaks and valleys and stuff like that. If you were to draw a basically if you were to draw a line from anywhere basically even as early as 2005, it's just been exponential growth for Apple, and that just is a testament to the strength of their products and their brand. It's getting stronger and stronger as more and more people around the world start earning more discretionary income. They're reaching for Apple products. And lastly, guys, I'm going to leave you those compounded annual growth numbers because I always like to leave those numbers to give you guys a bigger bird's eye view of what you'll be getting with Apple stock, assuming the company continues to grow at a similar rate. Okay, so I'm on Morningstar. You can simply find this information by going to morningstar.com, typing in this ticker symbol AAPL, hitting trailing returns. So while the broader market is down 9%, Apple stock is actually up 6% this year. And over the last 15 years, Apple's stock has grown at a compounded annual growth rate of 31%, guys. So not hyper growth, which is over 40%, but still high growth stock. And even over the last 10 years, still 25%. So that's why I say it's a good stock for beginners, guys. There's so many positive signs to Apple stock. The fact that it's got strong revenue, the fact that it's got a growing service business now, the fact that Warren Buffett, it's his largest holding, the fact that you're basically getting, 25 to 30% compounded annual growth over the long term. It just basically checks all the boxes, guys. So that's it for Apple stock, guys. One of my favorite stocks for beginners out there. If you guys are new to investing, definitely check it out. The ticker symbol is AAPL. You can buy it through any broker like Fidelity or Robinhood. If you guys are international investors, you can get it on active brokers, guys. So that's it. I hope you enjoyed this video. Please give me a thumbs up if you like my content, and hit that red subscribe button to receive more video updates whenever I post a free video. I post videos on the stock market every day, so be sure to check more of my updates. So that's it. Until next time, guys. Take care.